technology is transforming financial services because it's optimizing every touch point. It looks at consumers first. It looks at optimization of process. But we're an audience that wants to have things in a certain way. We're a new generation. So that consumer first, digital first, engagement that understands our data, that understands how to process and come to us in that way. The consumer wants it, and it doesn't matter what part of the world you are, they demand it. So it's the ability to play to that. On the flip side, on the institutional side, these institutions have lived through regulation heavy past 10 years plus. They need to optimize to keep their margins coming in, but also it's an opportunity to relook at how you do your business model.
So this technology change is disrupting the financial services marketplace and landscape, and it's also being influenced quite heavily by how the regulator is shaping their involvement and how they're influencing the market. If you look at the increased competition around challenger neobanks in the European Union and the UK as an example, the UK has been driven specifically by the Competition and Markets Authority, driving open banking with the competition outcome in mind. The stated aim is to increase the number of products and services and better competitive outcomes that are available to retail clients.
It's definitely made it more competitive. It's starting to level the playing fields, and it's giving everyone similar opportunities to address the same needs, and whether they're collaborating with the same fintech players or competitive offerings that have all spun up at the same time. It's definitely happening.
I think it's a race for finding the best fintech solutions and offerings that would meet the market needs. International research shows that fintech provides services that is at a reduced rate or price in terms of what you would pay for traditional financial services. In South Africa, the research shows that fintech helps with convenience and access to markets. So I think as long as the products and services that we're seeing being developed in the fintech industry relates to making our lives easier and giving those who didn't necessarily have access to finance or financial products access, I think the competitive landscape will be one where it's more about how do we bring these solutions into the traditional financial services models rather than competing with one another.
You're finding more and more new services, new ways of producing financial services emerging that are not being produced by the current incumbents. The question is, it is a threat, but to what extent is it a threat? Some people say it's the end of banking. My personal view is I don't think that's the case. Okay, we'll see added services, more convenient services, more frictionless services. Okay, services that are focused on taking care of consumers' needs in an easy manner. But is it the end of banking? I think that's an open question.
The notion of innovation being disruptive and a threat in any industry is one that is always going to be debatable. And certainly the rise of startups in the fintech space are going to threaten some aspects of traditional financial services. However, what we're seeing is the traditional financial service providers using tech to deliver their services in innovative and unique ways. So it's not a case of one taking over the other, it's about how do we use tech in a way to enable better service delivery. And whether that's a new player coming in the market to do that or a traditional player coming into the market to do that, I think we're always going to see a combination of the two. The nature of banking, I think, is going to change.
Traditional financial services, oftentimes the business models are based on being an intermediary. So if you look at a bank, a traditional bank, a lot of the business model is around collecting deposits and then lending out using fractional reserve banking methods, the majority of the money that you collect, earning interest on that money and paying less interest to the people who give you the money. So you're sitting there as an intermediary, you're performing an important function because you're keeping track of all the different accounts. That said, this new technology means that individuals and entities can start interacting with each other directly instead of needing an intermediary. And so traditional financial business models that, again, rely on being that intermediary are at risk for disruption.